Yes, he's online.
All right, you can see my screen now, right?
Yes.
All right. So today the topic of discussion, we're going to be discussing one of our module of indicators. And previously, let's have a recap what we've already done. We started with the chart patterns, and we've already done with reversal chart patterns. We have done one continuation chart pattern that tells us that the trend is going to continue in the same direction as it was previously. If it's a downward trend, it's going to continue as a downward trend. If it's an upward trend, then it's going to continue as an upward trend. So today and yesterday, we had a discussion on another indicator, MACD, and how it tells us what's going to be the next move of the market. And just of today, we're going to have our today's topic is going to be on one of the other indicators, that is Bollinger Bands. Now, I'm sure you've not heard of Bollinger Bands before, so let's just start from the very beginning. So we're going to be discussing indicators, and indicators are right here. What happened to it? Right. All right, so to select an indicator, we have to go to this indicators option and then type in Bollinger Bands. Once you click it, you type in Bollinger Bands, something like this is going to pop up. You have to click it. Then you're going to have an interface like this. These are the Bollinger Bands. Now, what is that? Let's just get to it first. Also, first we have to change the settings of Bollinger Bands a little bit. So over here on the left side, there's going to be BB written. That's short form for Bollinger Bands. You have to come over here and you have to click this settings section, go into it, click it. A tab is going to open up and it's going to say length is 20. Short it to length is 14. Change it to 14. And standard deviation has to be 2. Once it's done, it's going to become something like that. And the annotations are bothering me. All right. So to discuss it further, let's just first understand what Bollinger Bands. Also, we have to remove the background. Just go into the settings and remove background in the style section. Go into the style section and remove the background. This background, it bothers you. It's just a little unclear. All right. So what we're gonna do over here is, let me just pop up my annotations. Yes, we're gonna first study what Bollinger Bands are. Bollinger Bands are basically based on average. So the middle line is the average line, and the Bollinger Bands are basically the deviations. The market is deviating 2% from the average every time it's moving in the cycles. So what it's basically has to tell us that every time the market it goes and touches any of the extreme Bollinger Bands, it has to come back and touch the middle Bollinger Band again. Let's just go back and see how many times the market has done it. As you can see, the price is going up and touching the upper Bollinger Band and then coming back and touching the average again. And as you can see, the price is then going and touching the lower Bollinger Band and then coming and touching the middle Bollinger Band again. So basically, these are the Bollinger Bands, the extreme ones, and the middle one is basically the average value. So what the concept is that every time the price deviates 2% from the average, it has to come back and test the average value. So how can we basically benefit from this indicator? Well, to keep it really simple, every time the price crosses the upper Bollinger Band, breaks it, that could be a potential entry. If you are doing futures, that could be a potential entry for a short position, because the market has to come back down and test this middle Bollinger Band, the average value, it has to come down. So if you can see a break up a breakup of the upper Bollinger Band, then that's a sign that you can enter the trade. And what you can do, yeah, you can short it to keep it simple. And if it's entering the lower Bollinger Band, if it's crossing the lower Bollinger Band, then what you can do is you can enter long position. As you can see over here, it has crossed the lower Bollinger Band, and then every time it crosses the lower Bollinger Band, it has to come back up and test the average value. So it will always come back up and test the average value. By this, if you're a spot trader, you can always sell over here and buy over here. And if you're a future trader, you can short it here and long it here. The only problem is, sometimes it will give you false signals, right? Sometimes it will give you false signals, just like over here. As you can see, the Bollinger Band line is already crossed over here. If I were to zoom in, are you guys with me, or I'm just talking to myself?
Yes.
Great. So if you were to come over here, and you would see, really quickly, very quickly, that the price has crossed the lower Bollinger Band, has it? Or has it not? It is.
So the down line.
It has crossed the lower Bollinger Band, and according to my concept, it has to come back up and test this average value, right? And you were to open a long position here, you were to buy in spot over here, but the graph didn't really do that, and it just continued to drop and drop and drop, right? And then did it again. It crossed it again over here, continued to drop again, crossed it again over here, continued to drop again. And then when it crossed here, that is when it started to rise. So how can you actually tell which one, when the Bollinger Band is crossed, when to take the trade and when to not take a trade? That's when our next indicator comes in the play, that is called RSI. Now, a lot of people only trade on the Bollinger Bands. You will see a lot of people only trading on the Bollinger Bands, which is absolutely horrendous because it could give you potentially big losses. So what we're going to do is we're going to combine our Bollinger Bands with RSI. To do that, you have to go into the indicator section and type in relative strength index. So you can also type in just RSI, click it, and it's going to give you an interface like that. As you can see, it's an interface of RSI, this one, right? So just like Bollinger Bands, we're going to go into the settings section of RSI, and the input is set to be turned at 14th, and the length should be 14th too. Right. So now with that being done, let's just get into it really quickly, what I have to tell you guys. So the only problem right now, oh my God, what's happening? So the only problem right now, are you guys with me? Or am I just talking to myself?
Yes.
You guys are with me. Thank you. All right. So what we're doing? What we're doing? Yeah. So basically, the problem right now is Bollinger Bands are working perfectly. Just these couple of times they are giving us false signals. Otherwise, they are working perfectly, like over here, like over here. So they're giving us some of the false signals. So how to actually divide which one are false signals and which one are correct signals? So I'm going to tell you guys really quickly. We're going to be using RSI, relative strength index. So what is relative strength index? Relative strength index is basically an indicator which tells you when the price is overbought and when the price is oversold. So whenever something is overbought, like a lot of people buy it, chances are that the price will decrease from there because it's overbought. It's overbought. It's overbought. People have bought it more than they need. People have bought it more than what is normally bought. So from there, normally a selling pressure could be seen and the price could be dropped. Similarly, when a commodity is oversold, people have sold it more than it normally does. So a lot of buyers could pull up in. They would look at, they'd be looking at, be like, oh my God, this thing is oversold. Let's just buy it at a dip. Basically, oversold means a dip, and overbought is basically a peak, a high. So basically, you have to buy low and sell high. That's the concept of a hefty good trader. So what we're going to be doing is what we're going to be doing. Yeah. So basically, the problem was that Bollinger Bands were not working perfectly. So we have to use the help of RSI, and RSI is telling us when a commodity is oversold and overbought. So how is this graph basically telling us when a commodity is oversold and overbought? Simply by these lines. Take a look at these lines. Every time this graph pulls up and becomes big and crosses this upper line, this area is now, this graph is now overbought. That means the price is most likely to decrease from over there. And when the price crosses this lower line, when this graph crosses this lower line, that means the price is oversold and the price is most likely to increase from here. So you are only supposed to follow the Bollinger Bands when they are according to RSI 100, when they are following RSI 2. What's that supposed to mean? That means that if the Bollinger Band is crossing the lower Bollinger, if the price is crossing the lower Bollinger Band and you think that the prices will increase from here, you cannot follow it unless RSI is also crossing the lower line. And you can only follow the Bollinger Bands break upward only when the RSI is also above the upper line. Make sense or not? Just like that, if you had followed my technique, what will happen? Let's take a look. Over here, price broke down the lower Bollinger Band. And what I told you, that price, when breaks down the lower Bollinger Band, it has to fly back up and hit the average value. So a long position is really good. But as you can see over here, the RSI is not quite above the upper limit, when actually it's in the middle. So you were not supposed to take a trade over here. Same thing with this breakout. RSI is still not below the line. But if you can look at this over here, the breakout didn't happen. But if you can look at this breakout, RSI was already oversold a moment before it. Or if you can just mark it down over here, it's somewhere around here. So over here, the RSI was oversold along with the Bollinger Band being broken too, right? So a little bit of momentum was seen and a small entry for future trading or a small spot entry could be taken over here, right? So basically, if you combine Bollinger Bands with RSI, Bollinger Bands start to give an efficiency of 98%. Normally, Bollinger Bands give an efficiency of only 70%, but if you combine it with RSI, then the efficiency is increased to 90%. And I've also taught you about MACD yesterday. And with MACD, if you combine MACD, RSI, and Bollinger Bands, then you are just going to be an absolute boss. Because the more indicators you use, the more indicators you combine, the better your results are. And if you combine it with price action, like I taught you price action on one day, we're going to be having multiple sessions on price action again, basically about support, resistance, liquidity. We're going to have a detailed discussion on that too. And if you combine that concept too with this, then it's going to be exponential. Your predictions are going to become better and better. So let's take a look. Let's have a look at some examples. Are you guys with me? Are you guys following me?
Yes.
Yeah.
Right, amazing. So let's have a look at the examples before. Let's adjust the Bollinger Bands a little bit. Let's adjust it to 30 for a while. Yeah, it's much better now. Yes, it's much better now. All right. So I've changed the Bollinger Bands to 30. You can also change it to 30. 14 works as well too. But for me, I kind of like 32, 40, 14 is good too. Okay. Let's dive.
Sam, what is this actually, this 30, 14 under? What is that actually?
That's something mathematical. Let's just not go into it. And that's basically how many days average we are calculating. Like If you
Okay. It's a moving average for how many days? Okay.
no, moving average is kind of different, right? Bollinger Bands
Uh-huh.
work on a different physics, and the mathematics is kind of complicated. But to keep it simple, if you move it to 30, then just to keep it simple, the indicators work well at certain
Mhm.
specific levels. So we now know that this indicator works at this level, and this indicator works the best at this level. So now that we know, we can just easily see when and when indicators work and when how they're working and how they're working not. Make it fun.
Yeah.
All right. Very quickly now, we're gonna have a look at what's happening with this graph right here. I've switched to the part. I've switched back. The graph is BTC, and we're gonna quickly take a look. I have a chat too. Someone has text. Yes, Mohammed Aman is saying yes. Okay. All right. Let's quickly take a look at what's happening with the graph over here. And as you can see, the graph, it crossed the lower Bollinger Band right here. Yeah, let me just position it really good. So as you can see, the graph has crossed the lower Bollinger Band over here. And simultaneously, the graph is also cutting the lower limit of RSI. That means it's oversold. That means the Bollinger Bands are telling you this. Chances are the price will increase from here, and price increase until this upper limit was touched, and it was being oversold. And from here, the price decreased, although it didn't cut the upper Bollinger Band, but price decreased. So over here, the RSI and Bollinger Band, they give us an absolute perfect signal that the price will increase. Let's take a look over here. Bollinger Bands were cut again over here. As you can see very carefully over here, that Bollinger Band were cut over here too, but RSI, it was not quite up to the mark. So we didn't see the pump. The pump was not seen. But over here, not only, and it fell again, right? But over here, not only the lower Bollinger Band was cut, but RSI was met too, and we had a pump, right? So just by looking at RSI and Bollinger Bands very carefully, you can tell whether it's going to be a pump or not. Are you guys with me?
Yes, is there any exception for this?
Exceptions, I told you. Exceptions are usually less when we're covering, when we're using two indicators, like look at this. Normally the price is consolidating over here, but as you can see, it has cut, right? And simultaneously, it's quite close, so it has given us small dump, right? But when it's cut the lower Bollinger Band and it's also quite below RSI, then it's quite large oversold. Then you can see that it has given us. Wait, let me just cut them again. Yep. So as you can see, the price cut the lower Bollinger Band and simultaneously is cutting the lower RSI too, and we had quite a nice pump. Now you would ask me, Sam, which time frames do I have to look at on? It works perfectly in all the time frames. Let's have a look in a higher time frame. So what basically I'll be doing is when I'm looking at a higher time frame, I'm basically predicting bigger pumps and bigger dumps. When I'm predicting it in 15 minutes time frame, I'm going for the small pumps and small dumps for future trading. Right? But if you want to be the guy who predicts the big pumps and big dumps, then you gotta have what? Then you gotta have you have to predict it. You have to open it up in the bigger time frame. So as you can see over here, it's a 1 day time frame. It's a 1 hour time frame, and over here the graph is cutting the lower Bollinger Band, and simultaneously almost around. It's not quite crossing the RSI over here, but it did cross a little before that. So still, I wouldn't trade on that. resistance, it's not cutting it, right? It did give us a pump, but if I were trading over here, I would not trade just quite here, okay? I would skip it, right? We want to be 100% sure, so let's just skip it, right? And moving forward, what we are having over here, RSI is not met over here, so we are going to skip it too. Again, a Bollinger Band breakage, but RSI is not over there, although we had a bigger dump, although Bollinger Band predicted this dump, but RSI was not giving us quite up to the mark results, so we did not fall for it. We did not go for it. But over here, as you can see, RSI was quite overbought and Bollinger Bands were cut too. So we had quite a pump over here. A small pump and yet not hit the middle average line, but it's still giving us some good results, right? So basically, if you combine RSI with Bollinger Bands and then you're going to be using MACD2, then you're also drawing in support and resistance levels, then you can do wonders, right? But if you're just using one indicator, just relying on one thing, results are going to be less. So basically, when we combine all these things, price action, liquidity, indicators, chart patterns, what's going to happen is that our predictability is going to keep on increasing. Let's just blur it out for a while and take a look at what else we can have a look at this chart pattern. Let's go on to 1-day time frame, because smaller time frames are ass when you're going for bigger predictions, long-term predictions. So small time frames are complete ass. So if you are to predict BTC's next move, then you have to go into the higher time frames. As you can see, if I were to draw a support over here, every time it has to do that. Now, if I were to draw a support over here, you can see that there's a huge support over here. The price is coming and retesting again and again from this level. Again, 1, 2, 3, 4, 5, 6, and now 7. And you can even count this one, 8, 9, 10, 11. So there's a huge support at this level, right? And if I were to draw a resistance, it would be almost around here in this zone. There's a zone rather than a line. So over here, the price has went up till this level, this level, and then this level again, and then this level. So 4 times, it's quite a good support, quite a good resistance. Usually 2+ times a level has hit, we mark it as a support. Now, if you look at it very carefully, not only, I've told you, not only just the support and resistance works, chart patterns you also have to look for, right? Now, if you look at it, can you see a chart pattern forming? Anyone? The ones I've already told you, the ones I've already taught you, anyone can see a chart pattern forming? No one?
It's a head and shoulder, or
You can even say it head and shoulders, right? Yeah, you
Yeah.
can call it head and shoulders too.
Little
So
bit head and shoulder. Yeah.
Robin over here has told us that it's a head and shoulder pattern, which I've taught you quite many times. Not just quite many times, I just taught you once. So the price was increasing. Then it formed a resistance number 1, which we call R1. Then it fell on one certain level. And then it started to increase. Right? And then what happened? It crossed the resistance, the R1 resistance over here, and went up to R2. Like it broke the resistance and went up to R2. There's an R2, right? Then it came back again to the same support, S2. And now it's back up again, almost at the same level of R1. So that's a typical head and shoulders pattern. And head and shoulders pattern, it's a reversal pattern or it's a continuation pattern?
It's reversal. So it will.
It's a reversal pattern, exactly. So if BTC breaks this resistance, we can have what?
A dump, yeah.
A drop, a big one. I'm also seeing some fair value gap over here too, which is supposed to be filled round about at 84,000, right? So that could be a potential spot for BTC to acquire if it were to drop from over here. So all we have to do, we have to keep a look on BTC, what it does. If it crosses the support, if it breaks the support, that's why we're not trading right now. That's why I'm not giving you any signal right now. We are observing it, what BTC does. Does it break the support or it's just another retest? If it's a retest, then it's going to fly back up again to this support. And then we're going to monitor this resistance level, this resistance, I mean. If it crosses this resistance, that it could be an exponential big, and that could be expected on 20th of January. If we don't have a dump right now and we continue to increase and we break the support around about 20th January, then we could be really big on this, and I will tell you why. All right, so basically what I have to tell you today is that not just the indicators, you have to follow these very important parameters too. Now, once you have that in mind, right, you will not just follow Bollinger Bands and RSI alone, right? You will see them, but once BTC is really at a crucial stage, longing the trade would not be, or buying right now would not be very wise, because BTC is right now at a crucial stage. It could either fall drastically from here or just continue its normal cyclical trend. If it continues to its normal cyclical trend, then yes, we can trade. But if we are trading right now, if we are trying to buy over here, then what can happen is things could end up in a really big disaster, right?
Today, Sam, so today while doing in this S2, you see S2 here,
Yeah.
I was watching. It was a really very ideal situation to buy, but I'm really afraid without the signals. So
yeah, you can buy it on your own too. Like the whole concept of teaching you is that you become independent, right? Take risks, but don't buy with bigger portfolios. Take risks with small portfolios and see if see what you're doing is working out or not, right?
Yeah.
And also try to mark as many resistance and support levels as you can. For those of you who don't know what resistance and support is, you've not missed the previous lessons. Resistance and supports are basically a line, which is basically you have to monitor the highs and the lows. How many times the market has acquired a specific high, that's the resistance, and how many times if the market has acquired a specific certain low, that becomes our resistance support. So basically basically what support's telling us that market is basically respecting this zone. Every time it comes into this zone, it flies back up. So how does that happen? How does that happen? Basically, there are buyers sitting in the market. They are monitoring this level. And they, as soon as this level is hit, they start to buy again. And as soon as this level is hit, this line is hit, they start to sell. So basically, they have developed this psychological thing that they have drawn this line, so many people. And now what they are doing is that they are just buying at this zone and selling at this zone, making small profits every day. That's why you see these cycles. So once you spot these psychological trends, you can take it out of it. But if the psychological trend has broken, and I will tell you why it's broken. Let's say a person who's buying over here or who's longing over here, thinking that the price will reverse from here, continuing the normal cyclical pattern, he has put a stop loss right at the support. And so many people who are longing the trade over here or are buying over here, they have put a stop loss at this specific resistance, because me and you are not the only ones who have marked this resistance. Millions of people know about support and resistance and they have marked it. So anytime there's one wick which crosses this support, millions of stop losses are hit and we see huge red candles. That's why resistances are very important. And so many people have marked the support resistance level as an entry point. So anytime the price crosses the entry point, so many entry points are hit and the price skyrockets. So our session is all about to end. We're going to have another session in after one day, and we're going to discuss further this on. Thank you so much, everyone, for joining us. Have a very nice day, and I hope you practice this more and more and send your results in the group. I will be very happy to analyze them for you. Thank you so much, everyone.
Thank you.
Thank you.
Bye.
I'll be sending the recording too. For those of you
Yes, please.
late. Yeah.
Yes,
I
please.
know Tina joined late.